we might as well start.
Okay.
I'd like to welcome Lisa Walker with Premier Mortgage Center and Chris Johnson, right?
Yes.
That's right.
Okay, good.
Yeah.
And now pronouncing, is it Sagen or Sagen?
Sagen.
Sagen. All right. So these two lovely people are here today to tell us everything they have to between offer and the insights of what's going on with our market right now, and let you guys take it away.
Okay, thank you. Well, I want to say thank you for inviting us today and looking forward to sharing some of the new and exciting things that we have coming up. And as Maureen said, I have Chris Johnson here with me from Sagen, very knowledgeable and supportive. So I'm going to do a little presentation and he's going to add some insight to what's going on in the market and stuff from his end at the end, and a few other products as well. Can you see my screen okay before I go any further?
Yes.
Is everybody able to see it? Okay, great. Okay. So yeah, I'm with Premier Mortgage Center. We have a little over 40 lenders. I've been with Premier, just really started just before COVID. So it was a little challenging to get going. I have been in the industry for a number of years, more on the marketing and supportive role. And then I recently decided to take my license for associate broker and just did that just before COVID and really just getting going. So really enjoying it. Love working with new home buyers. I have lots of time to give them when they are having such a difficult time at the moment that I love being able to support them day and night. So, okay, so some of the stuff I'm going to cover is the pre-approval versus being qualified. Tell you a little bit about the mortgage down payment options, the mortgage broker versus the bank, and then purchase plus improvements. And feel free to stop me at any time if you have any questions. So what I wanted to say about the pre-qualification versus the pre-approval is, well, the difference is with the pre-qualification, I would really only do that if somebody called me and said, hey, Lisa, we're looking in the future to buy, but we're not actively looking right now. We just wonder, what we would qualify for. So I wouldn't do a credit check or any of that. I would just get a look at their financial picture and let them know what they would qualify for. Now, if they're actively looking, then we know how important it is for everybody to get properly pre-approved, especially in today's market. You want to know exactly how much you qualify for. So in the past, when you were pre-approved, it meant it went right to an underwriter. Presently, the difference is that it's usually your mortgage advisor, even within the branch, or the brokers they are really the ones that are taking the application and making sure that it meets a certain criteria. We use our discretion, and we're able to do that now because of the changes that have been made. That it now has to fall under a certain TDS, GDS, credit score. So now we take all of the income, we check their credit, we're able to see what they qualify for. And if it all looks great, then we will let them know how much they're approved for. If I see something that I'm unsure about, perhaps their credit's just at the border of what's acceptable, or they're newly employed, then I can ask for it to go to an underwriter so that we can get a better idea before you take them out house shopping, to make sure that they actually are good to go and don't need a little more time. So for the most part, this process works well. It keeps people protected from putting too much into their mortgage, so that they can afford their payments, and that when rates rise, they can still afford their payment. So it's been a good change. Okay, so for down payments, one thing that's worth noting, where a lot of the average home price has gone up quite a bit, that the 5% minimum is only good up until the 500,000. After a purchase of 500,000, it's 10% is the minimum up to $1 million. And then after $1 million, you would be required to have your 20% down. So in saying that, there's a number of ways for people to get their down payment. So there's the flex down, which is borrowing from their line of credit. So as long as it fits within their ratios, because that payment would then be included as a liability, they're able to borrow from their line of credits. There's the RRSP homebuyer plan. I'm sure most people are familiar with that one. That's you're allowed to redeem up to 35,000 tax-free, and you have up to 15 years to pay that back, as long as you start paying it back within the second year. So, and one of the big changes has been in the gifted down payments. We are now seeing within the first-time homebuyers that 30% of all first-time homebuyers now have gifted down payments. So we're seeing a real shift in parents and family members are helping their children out while they're still here. They're not waiting to leave money behind. They're investing and helping now due to what's going on with the market, so that they're able to get in and get a home. So that's quite a change. You can use your income tax returns, your investments, your savings. And then we have our first-time homebuyers program and our down payment assistance program. So the first-time homebuyers program is nationally, actually, well, Chris can probably speak a little bit more about those two programs. Did you want to jump in and explain those two, Chris, or?
Can I just interrupt for 1 second?
Sure.
Lisa, just wondering, have you been moving your page at all? Have you like moved your pages on the screen?
No.
Okay, I've got a couple people that are in black. They're not seeing anything. How many people possibly are in the black and not seeing the screen? I can see it, no problem. So
I actually just can't. I can't see it myself either. I was actually gonna mention that as well when you took a break, Lisa. So I don't know if, do you want to maybe stop sharing and maybe try to reshare and see if that might fix it?
See if that works.
Okay.
That's why I wanted to check. So I thought, well, if it was frozen, I just got that one screen.
Okay, sorry about that, everybody.
No, don't apologize. It's okay.
Let's try that again.
Technology, right?
Right?
Just the special people that get to see it, right?
Yeah.
Mine's black too.
They get the secret password.
Well, isn't that weird? That's
all right. So there you go. So now you're on
There
down payment. All I ever got was the original first page when you came up that said Premier Mortgage. So I wasn't seeing any
Did you want me
either.
to go back and start over?
No, that should be fine. I mean, we've been following you as you've been going anyway, so that's just good. I just want to make sure we were conscious of what was going on there. So that seems good. Is everybody good? Is everyone seeing the screen now?
Yep. All right. Good.
Awesome. All right, guys. All right. Go right ahead.
Perfect. Great. I can see it now as well, Lisa. So, so you were just mentioning about the first-time homebuyer program and the down payment assistance, which I guess are the last couple of bullets there on the screen. So just to put these in context, just to sort of give everybody a little bit of background. So the down payment assistance, the very last bullet, so that's actually a provincial program. So that was launched a few years ago by the Nova Scotia government. And basically the idea behind that is it's essentially a non-interest loan that the provincial government gives to first-time homebuyers who meet the criteria for the program. So there's certain income thresholds and you can only purchase to a certain maximum. But if you fit within those guidelines, the government will provide up to 5% in the form of a non-interest loan that people pay back over a 10-year period. So that payment for that would have to be included in their budget calculation to qualify for the mortgage. But it's a really great program for those who meet the guidelines, because again, it's interest-free money and they have a full 10 years to pay it back. So, I always say if someone does qualify for it, it's, you know, it's a better option in most cases than taking money out of savings or investments, because they can keep that working for them and then have the option to do this provincial program. So any of those that come in, Sagen as an insurer does underwrite and insure those, and they come into us as borrowed down payment. So it's a separate program that's called borrowed down, and Lisa, you call it referenced flex down as well, which is sort of one and the same kind of borrowed down source. So that's how we would look at that one, the provincial one. And the other program, the first time homebuyer program, is actually a federal program that's coast to coast. That one's actually quite significantly different than the provincial one, because the national one, the federal one, is the buyers have to have their initial 5%. And then the government will give them an additional 5 or 10% to basically lower their mortgage and lower their payment. So it's all about making the mortgage more affordable at the end of the day. The difference being, with the provincial one, they have to start paying it back, you know, within the first few months, and they pay it back over 10 years. The federal one, they actually don't need to make a payment for a full 25 years. So they actually have the length of the mortgage, and then at the end of that, if they're still in the property, they would be requested to pay that back. But they're paying it back based on the value in 25 years, not what they bought it at. So it's basically a shared equity component where the government is sharing partial ownership of your property in exchange for this loan, I guess, that they're giving on the side. So again, the unknown there is what they'll actually have to pay back. So some people like that, some people don't like not knowing. It just sort of depends. But what it does do for many people is get them into the house. So that's what people like up front. It sort of gives them options. Same as with the provincial one. There are ceilings on income as well as the amount they can purchase. So there are great websites. Maybe, I don't know, Lisa, we can always maybe share those websites with everybody after, if everybody wants to take a look and see, because again, they are government programs. So, you know, best to look right to the source on those.
Exactly. Okay, thank you, Chris. I know you do a better explanation of that than I could, so I appreciate that. Okay, so why would someone want to work with a mortgage broker over going to the bank? I think, you know, it's really important. I think with this market, one of the big things is that I can look at all of the lenders and all of the products and see what options are available, as opposed to them waiting weeks to get in to see different banks and have different people checking their credit. So it is a really good option. And, you know, it's not just about the rate. There's a lot of different products that work for different people where the rate can be very close, you know, which would only make a difference in maybe $10 a month in the payment. And a client may choose to go with that without looking at their options to see that if you are not with a lender that's allowing you to maximize your income, then you may be able to get qualified for more, which is very important in what's going on in today's market. So I'm going to just give you an example of what I mean here. So somebody who has a gross salary combined together for 80,000. So we put in, just made up some debts and whatnot here. So they would qualify for a maximum loan of 344,567. So they go to the bank, and in most cases, the bank only uses a small portion of your child tax credit. So they may allow, you know, a third of it. So 2,000, let's say, for example, of your full amount. So you now have 82,000 for your gross annual income. So now that changes your pre-qualification to 354,355. So that added almost another 10,000 to what they would be pre-approved for. So then we have lenders that will use 100% of your child tax credit. Now you're up to 86,000 in your income as opposed to 80. you now qualify for 373,933, which is almost 20,000 more added to your pre-approval amount. So I'm sure you know how important that is in today's market to be able to have that extra 20,000. So if somebody does have that child tax credit, they want to be able to use it. Now there are, small print on that where the children have to be usually under 12. Some will say 14, but you want to make sure that you are looking at all of your options in your situation. There are lenders that allow different things. Their rates may be the same, maybe slightly different, but it's worth looking at to see exactly how much one would qualify for. And of course, we are open 24/7. So if you are having questions on a Friday night or a Saturday night, or your clients have found a place, but they're not sure, they haven't been pre-qualified yet or pre-approved, you can always give me a call on a Saturday, Sunday, and I can give you an idea of what they should be looking at if they don't have the time to wait a couple days, which is usually the case from what I'm hearing in this market. It goes pretty quick. So, and lastly, I just wanted to touch on purchase plus improvements, because I think that's another one that's being used quite a bit now, where people aren't able to just shop around and find the house of their dreams. They're sometimes just having to buy the house that they can get into, that their financing allows for, or it's in the area. So people are wanting to do improvements to make it more the home that they dreamed of getting for their first home or second home, whatever it may be. So one of the new exciting things is that some of the lenders are now allowing up to 100,000 in improvements. So that's an increase of almost 60,000. So this is a big change. We're starting to see some changes with what's going on with the insurers and with the lenders to accommodate what's going on in the market. So that's great news. With the Purchase Plus, you want to make sure, of course, we would discuss this with them as well, but you want to make sure that if they're planning on doing renos, that they know that they can actually get the materials in. Some people are waiting, 6 months just for a door. Some people are waiting, any kind of, everything's hard to get right now. So you have 3 months usually to get the work done. So you're going to want to have your quotes done up professionally, and make sure that whoever's doing the work can actually get in and do the work, and that where you or they are getting their materials from, that all can be done. There are times where exceptions will be made if it can't be done in 3 months, but it's case by case. And more exceptions, I think, probably are being made right now due to the situation with COVID, making things hard to get and making it harder to get the work done. But typically it is expected to be done in the 3 months. So that was pretty much the stuff that I wanted to touch on. I know Chris is going to talk a little more about the Purchase Plus as well, and he has lots of other great stuff to share about what's going on in the market from their side. So before Chris takes over, does anybody have any questions on what we've touched on so far?
What's your rate right now, Lisa?
Well, we have a lot of them were just going up today, but I think I can still give a 309 for insured and 319 for uninsured. But a number of them have been going up the last couple of days, so I will have to check on those. And then I have some that actually, if they're, the other good thing about a broker is that we have for purchases. So these are rates that we're not holding for people that are just looking. But if you have a purchase and it closes in a certain amount of time, 45 days, 60 days, then you can get a lower rate. So we can, take some of that off if it's closing soon. So
Good to know.
but that's day by day. That can change. I could offer that today and tomorrow it might change. So it's all like purchases that are happening.
Yeah, it's It's going to be interesting to see what happens in the next few months with the rates, for sure.
Yes.
So
Yeah.
Lisa, when you say insured and uninsured, are you speaking of fixed rates, I assume?
Yes.
Insured
But-
versus uninsured, can you just tell us the difference between them?
Yeah, sure. So if somebody has less than 20% down, then they are going to be insured by
CMHC.
Sagen or CMHC. So those rates are lower. They give a little bit of a lower rate because you're insured. So if you are uninsured, there's a little more risk involved to the bank. So they have the rates usually 10 basis points higher or something. It's just a little bit higher. So.
And what's your current variable rate?
My current variable rate is, I have a number of them that have different discounts. So I'm going to have to go look, sorry.
All right, wasn't intended to be a trick question. I guess I should have figured that it'd be kind of all over the place.
Yeah, some give a discount of 1.45, some, but it just depends. So I don't want to give you a higher rate than I actually have without looking.
No problem.
But if you reach out anytime and I can give you my rates today and the ones that are, I can rate hold for 3 months on certain rates, and some if they were to purchase today, tomorrow, I can give a better rate. So, reach out anytime and I can get back to you very quickly with what I have, my best rates.
Wonderful, thank you.
Thank you.
Chris?
Okay,
I
no more
guess-
questions, and I'll let the wonderful and knowledgeable Chris Johnson take over.
Thank you very much. Thanks, Lisa. Thanks for the invite, by the way. Really a pleasure to be here with all of you. So this is great. So I'm actually going to share a few slides as well. So Lisa, I don't know if you can unshare or if
Yeah.
I can just, maybe we'll try that and see.
Okay, is that good?
There we go. Perfect. So in just a second here, you should be able to see. Can you all see that okay? Perfect. Okay, wonderful. All right, excellent. So just before I jump in and walk through our agenda for today that I'm going to cover off, I wanted to start with some good news. I think it's good news. 4 days, 23 hours, 7 minutes, 25 seconds until spring. I've been keeping this bookmarked on my computer for the last
Love it.
That is
little
great
while.
news. Yeah, we
it's
could all use a little spring for sure.
It's been a hard winter, hasn't it? Every
Yeah.
weekend it's been reminding us that it's still winter. So
Yeah,
yeah,
every Friday.
every Friday, you're right. Mother Nature's got 4 days and then that's it. It's time to move on, time to shift gears.
Exactly.
Lisa and I met and spoke about sort of what we both cover off, and another program that is certainly very hot in the market right now is New to Canada. So I'm going to spend a little bit of time talking about that. I will touch again on the Purchase Plus Improvements program just to see if anybody has any additional questions. And in addition to that, talk a bit about the housing market. Obviously, a hot topic for all of us these days. Really, over the last year or two, it's sort of replaced the weather and really even COVID as the first topic of conversation within our industry, because everybody's just sort of got so many questions around what's going on. And then I'll close off with an energy efficient housing program that Sagen has as well, that Lisa will share with customers. So important for you as agents to know a little bit about how it works and some of the background on just really that it's there more than anything. So I'll start things off with the housing market, give you a little bit of background there. Actually, just before I jump into that, I did put this in as a sort of a welcome intro slide for Sagen, understanding many of you may be hearing me for the first time and may be hearing the name Sagen for the first time. So I'll just give you a quick couple of minutes on who we are as a default insurer. So our role within the market is default insurance. So any of the buyers who have less than a 20% down payment, we are the largest private residential insurer in Canada. So we've been around for closing in on 30 years now. And some of you may recognize our old name, which was Gemworth. We've sort of rebranded over the last year and a half and now become Sagen. And we're a fully 100% Canadian insurer now here in Canada, and not only the largest private, but as of last year, the largest share insurer in the country now. So we work with all of the lender partners, or most of them, across the country, and certainly work closely with brokers and mortgage experts like Lisa as well across the country. So that's my role. I'm here in Halifax, and I cover half of Nova Scotia as well as PEI with Sagen. So enough of the Sagen commercial. I just wanted to make sure everybody kind of knew who I was and how Lisa and I work together. So when we look at the market, I've been referring to this market as the Twilight Zone for a few months now, because I've been doing this a while and I can't wrap my head around all that's happening. And I'm sure you're all sort of feeling the same way. These numbers come direct from the CREA website, the Canadian Real Estate Association. And these, of course, direct from the NSAR. And I'm sure most of you have relative access to a lot of these numbers. So I won't spend a lot of time going through all of them, but it is good to take a look and see, what is happening in the market. And just to sort of put it all under one umbrella, kind of what we've been seeing. Of course, the low inventory market that we've been seeing now, especially in 2021 and certainly into 2020 as well, has caused a strong seller's market and huge demand. I can tell you that at Sagen, we've seen more applications for people coming in from outside of Atlantic, Ontario, out west, people kind of migrating into our area, not just in Halifax, but we're seeing, as you can see, the trends, not so much in this chart because it started slower this year, but if you were to look at these same numbers to the end of last year, you would see rural Nova Scotia was absolutely way up year over year. And Halifax market was up, but it was, the year over year increases were largely felt in a lot of the rural markets as well. So there were a lot of people moving to that area, but straight across the board, huge unit sales. And I don't have to tell anyone on this call, huge year over year change in the overall pricing as well. So, I mean, when you look at just the first 2 months of the year in Halifax market, you can see we're at, 577 basically, which represents a little over 30% in the first 2 months of the year compared to January and February of last year. So what we do need, obviously, to help balance out the market is inventory. So once we start getting a little bit more inventory, and hopefully as spring market continues, we will see, I've been noticing a little bit more coming on lately. So hopefully we'll continue to see that trend. I don't think it's going to completely balance out the market by any stretch, but hopefully that will at least bring things in line a little bit more opportunity for buyers, and obviously even things out from a market perspective as well on the pricing side of things. Because as I'm sure everybody has seen, the overbidding that's been going on just about every property. I'm more surprised now if I see one that isn't an overbid versus one that is. So that's kind of the trend that we've seen all of last year and certainly kicking off this year. And not to go sort of outside of Nova Scotia, because that's really all of our local market, but just a bit of an FYI, kicking off the year, similar trends in other parts of the Maritimes, New Brunswick, same idea with inventory. Things are down a bit and prices way up. PEI, a little bit more balanced, and you can see it's driven to higher values, but not to the extreme we're seeing in Nova Scotia and New Brunswick. And the market over there is up slightly year over year. And then there's the Rock. They are rocking. I've never seen, they came a little late to the party last year and had a strong second part of 2021, but man, are they're taking off this year. They're so busy, a lot of business in Newfoundland. And because the inventory is a little bit more plentiful, we're not seeing that big rise in numbers overall. So bit of a snapshot for you, give you an idea on what we're seeing. I'll stop there before I go into the program piece and just see if there's any comments or questions. Anybody wants to add anything on what you're seeing in the market?
I just hope you're right about it getting a little bit better.
Yeah. It's to be full disclosure, I threw my crystal ball away long ago. It stopped working and I couldn't get batteries that fit. So I don't know that anyone really knows what's going to happen, but the reality is we know what needs to happen for things to work. So it's really fingers crossed on listings to help balance this out a little, because you're absolutely right. We all need that for sure. So one of the big opportunities, in addition to what Lisa mentioned with Purchase Plus improvements, is new to Canada. And this is something we, over the years, I can say at Sagen, and I think in the market in general, have seen a larger increase of certainly in the last few years as immigration has been rising around the region. We're so well positioned in Halifax from an immigration perspective because being a port city and, are certainly the largest market within our region. And we've been seeing the immigration numbers trend higher. Obviously, during COVID, things were slower and there wasn't as much opportunity because of border restrictions. But we are seeing, and the government is expecting, that we're going to see continued immigration. So with that is the perfect opportunity for a program like New to Canada that Lisa can offer through various lenders. And basically what this is for anybody who's basically newer to the country. So we define newer, and when I say we, I'd say Sagen. Our definition of anyone that's eligible under this program is anybody who's been here for 5 years or less. Different lenders may have different rules on that, and Lisa would know those. But from our perspective, that's how we define. That's how we define someone new to Canada. They need to have either a permanent resident status or a valid work permit, and they need to be working full time for at least 3 months, generally, to be considered, and must be working and earning their income and paying tax here in Canada. So it's not for somebody part time. There are certainly other programs. This is really someone who's buying, new to the country, new to everything, and just doesn't have an established credit profile here in Canada. So that's really where this program shines, is because people often think in order to qualify to buy a home, you need to have Canadian credit, and there's no exceptions to that. When in reality, you really don't. It depends on your down payment and your history. If you're buying as little as 5% down, normally, of course, we would need a credit bureau report from here in Canada with established credit, ideally a couple of years of at least 2 or 3 trades well established. However, with New to Canada, it's designed for people who really ultimately don't have that. If they're buying at 5% down, then we could look at using a credit report from their home country if they're that new that they have that, and it would need to look like a Canadian credit report, basically, in order to qualify as something we could use. If they don't have that, then we can even look at, if they've been in Canada for more than a year, we could look at 12 months of credit or a rental payment history, along with a utility payment or cell phone or something like that. So we're basically looking at alternative credit sources as opposed to established credit here in Canada. And that could actually potentially get them to be able to buy it 5% down, which that's huge, because I'll tell you, a lot of people come into Canada from countries where, you need 25, 30, 40, 50% down payment to even buy a home. And they land in Canada and find out 5% down, and they may be able to do that even if they don't have that established credit. So it really opens the doors a lot for people. And obviously there's some caveats to this, and that's where Lisa would need to work with them and ask questions and make sure they fit and have all the documentation and the income and all of that. But I'll say this, when this works, it works amazingly. And it really does get people access to home ownership now, as opposed to having to wait a few years to establish their credit. If they don't meet these criteria, then they could potentially put a little bit more down payment to 10%, and they don't need credit bureaus or rental payment history. All we look at there is 6 months of bank statements or a reference letter from a financial institution. So the criteria opens up even more. And a lot of times people coming into Canada come in with, sizable amount of money because they're starting a new life, and they may be able to do 10% instead of 5%. So just keep that, as an agent, obviously, I realize this isn't detail that you necessarily would be talking specifically to your customers about, and that would be more Lisa's role as the mortgage expert. But good to be aware of some of these things that are out there, so that you know that programs like this exist and can at least, turn the buyer in the right direction to maybe be able to get some help. So I'll stop for a moment and see if there's any questions on this or any specific on anything we covered. Lisa, I don't know if you want to add anything to what we've talked about so far. But the program?
No, I think you did a great job covering it, Chris. So
Great. Before we move on to the next thing I was going to cover, maybe I'll just touch on the Purchase Plus improvements for a moment. I think Lisa did a great job kind of covering what it is. I will say from Sagen's perspective, it's our top specialty program. So it's the #1 program that we see business come in. It's been a little bit slower this year, and I think mainly that's due to kind of what Lisa touched on, supply chain, the market moving so quickly, all of that. But I think there's a tremendous opportunity here for Purchase Plus because it opens the doors for people who can't find that exact home they want, and they could finish the basement or update the kitchen or really anything. Our criteria at Sagen with Purchase Plus is anything that is fixed to the property and adds value. Those are the two things we look for. And the property itself needs to basically be in insurable, good shape without the improvements. It's meant more for things like cosmetic upgrades or things like that are going to add that value. But really a fantastic program. And I'll mention as well, I'm just going to go over to our website for a moment. We do have a section on, so it's sagen.ca, and we have a program and underwriting section, and all the details on all of our programs are in here. Again, this really would be something that Lisa and I would look at all the time, not necessarily all of you as realtors. But again, if you're ever wondering kind of what's going on out there and what programs are out there, it really is an excellent site. There's a great search function in here, and you can sometimes find some of that higher level information that you're looking for. Again, be more things that the mortgage side of things all of us would look at, but I just wanted to kind of mention it to you that it is available as well if it's something that you're looking for a little bit more detail. And the last thing I was going to plan to cover here is something that I think is a great opportunity for all of us really to talk about. And we have an energy efficient housing program. So if you have any buyers who are buying a resale home, building a new construction, or in some cases, they may be even buying a resale and doing Purchase Plus improvements, like Lisa mentioned, to add, a new heat pump or to add new windows and doors or some kind of energy efficient component to the property. If they qualify in one of those three categories, Sagen would potentially give them either 15 or 25% of their premium back. So essentially, we would refund them. Depending on how energy efficient their home is, we'd refund them a portion of that premium. So of course, they'd have to share documentation with us to show their home meets the guidelines. All the criteria for this is on our website. So, something that Lisa can share with them when it's part of the conversation she's having with them, just to let them know. It's nothing they need to do before closing. In fact, they can't actually apply for the rebate until the mortgage does close. So basically they'll close, move in, and then they have 2 full years, up to 2 years to apply for this if they think they might qualify for it. But, when you look at the price of homes and you think about the average premium someone's paying, I was looking at one earlier today, an average of $375, your premium's going to be a little over 14 grand. And if they qualify for the maximum, be about $3,500 back in pocket. And we just cut them a check. We don't make them put it back down on their mortgage, or, they can do with it whatever they want. These days, I'm sure there'll be some people heading on an airplane to go somewhere warm because we're all craving that, some kind of a trip. So they can do what they'd like with it. The point is just letting them know that it's out there. So again, not something that as realtors, you're going to need to know the ins and outs, but a really nice thing to be able to mention to them and say, talk to your mortgage broker, ask Lisa about this. She can share with them the details and go from there. But, most people don't have a clue this exists. And I will say it's fairly underutilized from the numbers I've seen. So it's a really good opportunity for you to just get the word out and help spread the word and get some money back in pocket. So, so that's our energy housing program. So I'll stop there and I'll do another quick question check before I pass things back to Lisa. Any questions on this or anything else we touched on? All good. All right. So Lisa, I'll pass it back to you. I don't know if there's anything you'd like to add there.
Not about the stuff you covered. You did a great job covering all that, but I did want to say thank you for coming and helping me out. Probably nice for them to hear a nice soothing voice after my presentation. If I seemed a little nervous, I am a little nervous. This is my first presentation that I've done, so I do appreciate the opportunity. And if you give me a call, I promise I'll work hard for you and your clients. And I'm gonna put you on the spot here, Maureen, if you don't mind. When I thought it was in person, I was going to give away a gas card to those that were there. So would you be able to just put everyone's cards or names in something and do a draw for those that attended today? So as a thank you, I can give a $100
Absolutely.
gas card
Wow, that's
for
awesome.
attending today.
Yep.
I do appreciate the opportunity, and so you let me know who that is, and I'll bring that in, and I'm going to drop off some cards. And if anybody wants to reach out and get some regular updates on rates or just have a call about a question, I'm here 24 hours a day, and we don't get paid until the clients actually have a mortgage. So
Yeah, you guys work the
there's no
exact same
charge
way
to
we
use
do.
us, and we will work very hard to help your clients get into their dream homes. So thank you for having me, and
All of us to be.
Yeah, no, we're very happy that you could come out and help us today, you know,
Dennis needs to be on mute.
sorry, I'm having a hard time hearing you.
Yeah, I think we got Janice in there. I don't think she realizes.
I don't think
She's
she
not on
knows
mute.
your text.
Okay.
I'm gonna mute her though. There you go.
Oh, did you mute her? Great.
I muted her. That's it for her.
She's done.
So the only person, Krista, I don't know your last name. I don't know if you can at least write it in the chat for me, or because all it shows up is Krista, but oh, thank you. Got that now. Perfect.
A couple
I
left.
wouldn't have known that was your first presentation, just as a side note.
No.
Oh,
she
well,
did
thank you very
fantastic.
much.
You did
Seriously.
fantastic.
Yeah, no, yeah.
I appreciate that.
absolutely.
I was didn't think I was nervous, but then when you start speaking, I realized, yeah, I was a little nervous. So you can see Chris is a professional. He's been doing this for a long time. He's very good at his presentation. So I very, very much appreciate the support from him today.
That's
You did
awesome.
fantastic, Lisa. Great job.
Well, thank you
Absolutely.
very much.
Yeah.
It's not fun. This part isn't the fun
But
part.
I really do love what I do, and I'm happy to help anytime, and I will work hard for your clients and for you and do the best I can. So
Can you share these slides, Lisa, so that we can send them out to everyone?
yes, I can.
Yeah, just give me an email with it and then I can have it distributed.
Yeah, because those who
Okay.
couldn't, it is March break, so those who couldn't make it can watch it taped and then get the slides.
Yes, that's a good point. Yeah, I forgot it was March break. Yes, so
Just to clarify on the slides that I shared, they're proprietary to Sagen, so I'm not able to share those externally. But what I can do though, Lisa, is share with you a couple of the web links where all the information's on there. So
okay, great, thank you.
you're welcome.
That's great.
Awesome. All right, thank you everybody for participating again, and again to you both for being so kind to speak with us today.
Thank you. And on a closing note, I thought I would say, Maureen, from the time I've met her many years ago, I knew that she'd always be a very good sales person, because I once went to her house to pick up some lobster, and I came home with lobster and a dog. So there you go.
You still have one of the last the Mohegans from that one litter that we ever had. So
And we love them dearly. So thank you.
he's
That's
spit an image
awesome.
of his dad. So he lives on, my daddy's spirit lives on within him.
That's right.
So
Yeah.
yeah.
That's a
All right,
beautiful story.
guys. Take care, everybody.
Thank you, everyone.
Thanks. Bye.
Thanks, everyone.
Okay, take care.
Bye.
Bye-bye.